All right, everybody, listen, most investors are playing defense out there against taxes and lawsuits and the government. But if your business isn't structured right, you have already lost. One wrong entity can double your tax bill. One missed trust setup can absolutely erase generational wealth. And if your real estate is sitting in your personal name, you are one lawsuit away from losing everything. So today, we are going to show you how to bulletproof your wealth before the IRS or a lawsuit comes and takes it. Tony Dixon runs Advanced Tax Group. He is the guy behind the guy, building invisible legal walls around real estate empires, whether it's an LLC, an S Corp, trust, tax codes. It isn't just theory. This is what separates the rich investors from the broke ones. So welcome to the Closers Club. Let's get right to it. Tony, let's kick this off. Let's kick it off with a bang. Most investors, most people think that filing their LLC online is enough, right? And that's all that they're going to have to do. But what's really the first domino, right, that investors are missing when it comes to actually protecting their wealth? What should they be doing?
You know what? I mean, it's such a good question. And my take on people setting up LLCs online is, using some of these online platforms. Hey, more power to them. People go to something like Legal Doom. Great.
Legal Doom.
we love it because what happens is those people inevitably come to us and say, hey, we got zero support, zero answers. They upsold us, nickel and dimed us. Can you fix this for us? Yeah. Like, absolutely. So for us, when someone says we set it up online, we know it's a client that we're probably going to end up working with. And it's usually
are you able to unwind whatever they did on Legal Doom? I love that. That's fantastic. I'm going to laugh about that all day.
So in some cases, yes, but it depends on how far someone's gotten into the use of that LLC. If someone set this LLC up online and they are deep into that business, they've got bank accounts, they've got transactions, it's all over paperwork. The reality is unwinding that takes work. Can it be done? Absolutely. But in most cases, if someone's that far into it, we're generally saying, hey, what's going to be best is start a new entity and do it the right way. And slowly unwind the past decisions while setting a new starting point of this is how we're going to be building from this point forward.
Right. Yeah. And that I think we've talked before. That's one of our problems. I let somebody just set up they set up a corporation and I'm holding properties in Tennessee, and it was absolutely the wrong thing. And it's cost me so much money over all of those years. So, well, let's kind of talk about, first off, like, give people like the elevator pitch. What is it that you do for specifically real estate investors?
No, I appreciate that. Yeah, what we do here at Advanced Tax Group is our main focus is our job is to help you protect your wealth. Make sure that you're protecting wealth, guarding it, and growing it. And we do that through what we call our lid principle. It's our opinion that there's a lid on the general public's wealth. And what we want to do is remove this lid. And that lid is the acronym of lawsuits, income taxes, and death taxes.
Oh, okay.
These are the things that kill people's wealth faster than anything. And so our job is to come in and say, how do we protect you from lawsuits that can destroy your wealth in a heartbeat? Income taxes, that is the slow death over a lifetime of running a business and paying taxes. And the death tax that may not affect you, but it is going to affect your legacy and future generations and beneficiaries.
Right.
And so how is addressing that?
Yeah. So how important is it? Because there are going to be people of, all experience levels watching this. Is this something they should wait until they've got maybe like 10 properties? Is this something they should do before they even start? Like, where in the kind of the life of a business or of an entrepreneur should you guys come in and help them?
It's a fair question. We get a lot of people coming to us saying, well, I don't have an estate. I don't need an estate plan. It's like, I don't have a Ferrari and thoroughbred horses and investments and mansions. It's like,
Yeah.
Do you have kids?
Yeah.
Do you own a single property? Do you have a house? The reality is once you start acquiring things, whether it's family, relationships, things of
Mhm.
value, sentimental or financial value, monetary value,
Right.
you need to start considering how to protect those things. And so, whether it's your first deal or if it's your 10th deal, there has to be the consideration of some component of this. And so, what I would say is, if you're doing even your first deal, an LLC absolutely needs to be part of that conversation. You
Nice.
know,
So, and I feel like I'm going to speak for most wholesalers because I am terrible at this stuff. If you were to ask me if I had a C corp or an S corp, I'd have to look at the last tax return that I did. So, how do you help them like pick that right entity? Is it like, can they just like set up a call with you guys? Like how kind of walk me through that process? How does that even work?
yeah, absolutely. I mean, a lot of people don't like this answer,
Mhm,
but when it comes to our team of CPAs, enrolled agents, attorneys, and paralegals, and
mhm.
someone says, "What's best for me? What should I do in this right now?"
Yeah.
Our response is generally going to be, "Well, it depends. You
Yeah.
know, who's involved? What's the goal here? What are we trying to accomplish? And what are you actually doing?" And so, in order to get the answer to the "it depends,"
Yeah.
we do consultations, and so people book calls with our team, and we actually do a deep dive. We do what we call a lid assessment. We're
Right.
going through and saying, "Hey, do you own real estate? Do you have children? Do you have other businesses? What type of real estate do you have? What other investments do you have? What's your tax liability every year?" And so, once we start gathering this information through this lid assessment, to determine their exposure to lawsuits and income taxes
Mhm.
and death taxes, we can then hone in on what the suggestions look like to say this is actually what needs to happen in this case.
Mhm.
Because setting up an LLC taxed as an S corp or a C corp or which direction actually depends on whether you're making active income or passive income. How
Mhm.
much taxable income do you have? Is it at a level that justifies the added tax work and changing of that structure because there's more cost to that? So it really is a case by case situation that we have to look at to
Right.
determine what's actually best for that person.
So based on like, are you a flipper? Are you buying and holding? Are you involved in syndication, whatever, right? Like you just really need to dial in and make sure that it's the entity that you're setting up really is just tailored to them, right?
100%. Like the entity you choose as a business owner
Mhm.
is absolutely going to impact the way you run the business and your short-term and long-term goals. How do you
Mm,
file taxes for that? Are you
yeah,
trying to maximize how, like, if you don't care how much you pay in taxes and you don't really care if you're actually separating your assets out, then
yeah,
go to Legal Doom and do that LLC online.
yeah,
But if your goal is to be, a situation where you are doing a business,
mhm,
making money and trying to keep as much of that money as legally possible,
yeah,
then yeah, that choice of the legal structure and how it's taxed makes a big impact.
right. And I think what you just said there is perfect. We all want to do the right thing. We all want to comply and pay Caesar what's Caesar's, but also I want to
Yep.
keep as much of it as I can. And the tax code. I don't think this is what a lot of people realize. It's written by rich people for rich people, right?
Oh,
Like
oh, yeah.
having having businesses and LLCs, like the people who lobbyist, and I don't want to say by government, but that pay all the money to have the laws written. I feel like most of the tax code is written for businesses, and that there's very little piece that's written for actually normal people, just W-2 or wage earners, whatever you want to call them.
You're absolutely right. I mean, the impact that the tax code, like this new big beautiful bill,
Yeah.
the impact of the big beautiful bill is going to affect a ton of people. And there are laws that are in there that are going to affect a lot
Mhm.
more of the general public. But the reality is a lot of these laws were not designed for the general public. They were designed for business owners and
Right.
individuals, to your point, that are at much higher tax brackets.
Right.
So, but
So,
I was just going to say the beauty of it is
yeah.
these tax laws, even though they're designed for a different tax bracket,
Right.
anyone at any level, even if it's their
Right.
very first business, can benefit from those laws.
Right. And that's what's amazing, right? If you just have the right person on your side that understands them and how they can apply it to your business. How important is it to, and this is something I see quite a bit, people are like, well, I need an accountant or a bookkeeper or something. But I think it's really important to find one that really specializes in what you do. Like in my case, I do real estate. So I want to
Mm.
find somebody that handles real estate because the tax code is so big, right? Like it feels like it would be impossible to be an expert in all aspects, right? If I want to be a doctor, I want the doctor accountant, right? Like,
Yep.
yeah.
Well, I mean, to that point, I mean, if I have a heart attack,
Hmm.
I'm not turning to my wife and saying, "Quick, take me to my dentist. He's my guy." You you know, you
Yeah.
find someone who has
Hmm.
experience in that field, and, we
Yeah.
always tell our clients, when it comes to bookkeeping and taxes,
Hmm.
a lot of that is getting the right people on your team, but doing a really good job at keeping records. Because,
Hmm.
if someone comes to us and they've done a poor job at keeping records, it's like garbage in, garbage out. You
Right.
give us garbage information, we can only do so much with that to actually get you great results.
Right.
And so finding a bookkeeper and an accountant or an attorney that has experience in the field that you're getting into, and in this case, real estate, is
Hmm.
is going to be impactful. And I'll tell you why. Because nobody cares about your money more than you.
That's
So
true.
if you have an accountant who's also experienced in real estate and active in
Mhm.
real estate, or a bookkeeper who's
Right.
active in real estate, you know that they've spent the time to figure out how to maximize their own taxes.
Right.
You don't have to pay them to figure it out for you.
Right. I think that's super important. And how just kind of, and I know we have a bunch of other things to talk about, but how important is it to, have your bookkeeper and your accountant aligned? And is that something that you guys do all of that, or how does that work?
Well, it's the right hand knowing what the left hand is doing. You can The dollar amount you put on that in savings is
Hmm.
really going to be time.
Yeah.
Because the back and forth between those two that
Mhm.
don't work together is,
Yeah.
one, it's going to be a time cost value for you, but then also just a headache and stress. And so,
Mhm.
here at Advanced Tax Group, we do it all.
Really?
We do tax planning, we do the strategizing, we do the
Hmm.
accounting and bookkeeping,
Yeah.
and then the actual compliance and prep. And so all of the stuff that we do is under one roof. So, when we're doing the taxes, it's next office over, where it's, hey, what's
Mhm.
going on with, Joe and his
Mm.
tax?
Right. I'm going to tell you guys that is so important because I have a great bookkeeper, a real estate bookkeeper. A lot of people recommend him. They're great. I have a great accountant out of Atlanta, has the bedside manner of an assassin, but great accountant. But the two of them fight like they're little schoolgirls,
Wow.
and one knows more than the other one. And they literally, Tony, one time I had to get them on a Zoom and be like, okay, we've got to stop this. like, like they're at the point where like they wouldn't even email each other. Like they were just fighting. And I'm like, guys, this is
Oh, yeah.
absolutely dumb. We need to just figure this stuff out and move on, right? Like we got to work together. Please, for me, work together. I'm the guy paying you.
How much more do I have to pay you to not
Oh,
make me have this conversation
I
again?
know, dude. I felt so ridiculous. Two grown men over 50 and me, and we're here, and I'm like, guys, I get it. Everybody's feelings are hurt. We gotta find a way to work together. And that's not, what I want to be doing as a CEO, trying to figure that stuff out. But let me ask you this. So we talked about the right entities, but again, you know, as an investor and wholesaler who's not great at this, right? And this is why we
Sure,
outsource. This is what we should be doing as business owners, right? Bringing in the very best people to handle these particular parts of our business. This is, of course, why we do transactions for people. But like, I don't know about this stuff. We were just talking before we got. I'm woefully behind on these things. But
sure.
there's so much stuff, right? There's LLCs and S corps and trusts. Like what are even trusts? How are they used? And how do I pick the right trust, or do I even know if I need a trust?
Man, that is a loaded question, Dave.
I know, man. I'm
Um,
hitting you with the hard stuff today.
all right, so, well, the problem is you've got like 60 different versions of trusts.
Okay.
Okay. So you have the main ones that people are typically working with is you have your revocable living trust and an irrevocable living trust. Okay.
Okay.
Basically, it means the revocable means you can change it in your life. The
Mhm.
irrevocable is not changeable, very hard to change.
What
Typically,
would
what
be
we
something that you would change? Like when you say changeable and not changeable?
assets in and out of the business. So generally what you'll find is an irrevocable trust is one where you've got legacy assets,
Mm,
stock, Apple stock that the family's owned for generations. commercial real estate that there's no intention to sell, but you want to continue to appreciate and produce income.
Mhm.
The
Okay.
income goes into that irrevocable trust, and that then pays out the family, the beneficiaries, generation after generation after
So they
generation.
can't sell it no matter what.
Yeah, so a good example of this is the Rockefellers and the
Right.
Vanderbilts. Okay,
Yes.
the Rockefellers are still one of the wealthiest families on the planet. They have an
Mhm.
irrevocable trust with a very unique structure associated with it to where the family members can't basically go in and change and liquidate all the assets. Vanderbilts aren't even on that list anymore. Their name's still very important. It's very
Yeah.
known, but their entire estate was dwindled down because generation after generation, they sold off assets, they mismanaged,
Yeah.
it was squandered. And so a lot of times what happens is the trust that we always recommend for people is going to be a revocable living trust to protect them from what we call probate.
Right.
Okay. So an LLC protects people from lawsuits and other
Mhm.
people in the world because we live in a litigious society.
We do.
People sue for everything.
Mhm.
A trust is designed to protect you from the government because what
Oh,
happens is a trust gets everything out of your name and into the trust to avoid probate when you die, but it also gives you privacy. So
interesting.
when you die, if your estate goes into probate, that's public record. Do you want everybody and their brother knowing what you built throughout your life that's going to go to your children and let the government come up with a plan for how they get those assets?
No, absolutely not.
Of course
They
not,
could
right?
no, they can go pound sand, right?
Exactly. So to
Mhm.
avoid that probate, you use the revocable living trust. And so those are
Okay.
the kind of the two main trusts. And then that revocable living trust owns your LLCs. The LLCs own the real estate. So you control the LLC, you run the business,
Mhm.
pay taxes through the business, but it
Yeah.
all funnels up into the trust. And so this helps us accomplish this idea of own nothing, do nothing. See, we
Alright.
we we call this our brother-in-law strategy. Because we
Okay.
all know we all have someone that says, "Well, that sounds like my brother-in-law. They don't own anything or do anything," right?
Yeah. Yeah.
And so you set it up to where the LLCs run the business, they do it, and
Yeah.
some LLCs do the business, other LLCs own the assets, and they work together, but then
Mhm.
ultimately everything runs up into a trust that owns it. So on paper, David doesn't look like he owns anything.
I love that. That's what I want. That's what I want. I don't want everyone to have to give away half of my stuff again.
Yeah.
Okay, so we have LLCs that keep us from getting sued, trusts that keep the government out of our business. But how do we actually lower the taxes? Like, what are some of the strategies there that
Oh,
investors should be paying attention to, and why they should be calling you?
great question, and there are so many strategies when it comes to lowering
Mhm.
your taxes, but some of the main ones, this is what's super cool and what I love what you do, David, because the tax code is actually designed for business owners. Like
Mhm.
there's a section for personal taxes, but the tax code is so massive. It's over 10 million words,
Yeah.
and it's so we can address taxes. And the majority of tax savings and the best tax savings come for real estate investors. And so
Okay.
if you're an LLC while also doing real estate, you have more tax savings at your fingertips than anybody else. And some of the main ones are going to be depreciation. We got a lot of bonus depreciation coming back, 100% of it. You
Yeah.
can do cost segregation studies to where, you can accelerate depreciation over 27 and a half years down to, just a couple of years. So you can get immediate tax savings there.
Nice.
But if you don't even own a piece of property and you're just looking to saving your taxes as an
Mhm.
individual, flipping properties, wholesaling properties,
Yeah.
set up an LLC and start writing off cell phone bills, car expenses, travel expenses, marketing, software,
Mhm.
the closing
Right.
costs, pay your children, rent your own house out to yourself.
Yeah.
This is literally tens of thousands, if not hundreds of thousands of dollars in tax savings that you get as a business owner that you
Yeah.
do not get as an individual.
Right. Because it's 100%, it's not what you earn, it's what you keep. That's
Oh,
what counts, right?
absolutely. 100%. That's really what it comes down to because you can make $100,000 in your business and get
Mhm.
your tax bill down to effectively 0, and then
Oh, I
take that money that you made in the business and not paid in taxes,
mhm.
reinvest it into additional tax or in additional real estate,
Mhm.
deals, grow your wealth even faster. Continue to
Wow.
kick the can on depreciating properties and assets. So you're
Mhm.
just constantly pushing out a tax bill that may actually never happen when combined with LLCs and trusts.
I love that. So we've got your link here. We dropped in the chat and we'll put it in the show notes. What happens when they go to advancedtaxgroup.com? Is there a place to book a call with you? Like, what's their next step?
Yep, there's places where you can book a free call. It's all
Mhm.
free, so there's no cost to spend some time with us. But by booking that call, we're going to go in and do one of these lit assessments and identify where you're at.
Okay,
We're gonna take a snapshot of where you at and where do you want to go. So for us,
love it.
it's past, present, future. Where have you been? Where are you at now? And where do you want to go?
Yeah.
That then determines the suggestions and advice we then give you.
Now, listen, what about if you're me and you're very embarrassed and you've screwed up and it's been just an absolutely rat's nest of stuff where maybe somebody's got a bunch of receipts in a literal shoebox, which I was there years and years ago. I was that guy. Like, you're not going to be mean to them, right? You're going to have a little bit of compassion for them.
This is a safe place. We're all
This
friends
is a
here.
safe place, right? Okay. Yeah,
Yeah,
because I'm telling
we
you, that's
work
a
with
real
everybody.
thing, right? Like, it's embarrassing because, like, this is why you need experts, but we realize sometimes that we're not the best at this stuff, and maybe it's so fouled up that I just literally need somebody to hold my hand and talk to me, not like I'm dumb, but just in a way that I understand so that I can get through this.
We literally have that conversation daily.
Yeah.
So we would not turn anybody away, and at least to have a conversation.
Yeah.
So
Awesome. Well, let's do this. I know I've kept you a little bit long, but last question for you.
yeah.
If you were in my shoes, right, and you were going to build your real estate empire from scratch today, right? Like literally, there's nothing set up. What's the first move you would make to make sure that you lock in that wealth so that nobody can take it, whether it's another person or entity or the government? What's that first move you'd make to lock in your wealth before you made that first dollar?
Man, all right. Well, that first move, I
Hmm.
mean, truly, that first move is going to be set up my trust. Like, if
Gotcha.
you're going to do anything, set up a revocable living trust to
Mhm.
really build a foundation. Everything from there is built on that, built on
Right.
top of that. From there, an LLC. Okay.
Okay.
So trust LLC combination, you have asset protection that
Nice.
95% of the people out there don't take the steps to do.
Awesome. And guys, you can do that. Go to advancedtaxgroup.com, book a call, talk with Tony and his team, and get these things set up because you don't want to be like me. One of my companies was set up incorrectly, and it has cost me so much money in the state of Tennessee because a lot of my properties are there. So that is very difficult to unwind. So go to advancedtaxgroup.com, book that call. Guys, if you like this, make sure you click share, send it over to somebody who probably needs help, which is all of your friends. But share it, get the word out. And Tony, thank you so much, man. I really appreciate you coming on the Closers Club.
Man, I sure appreciate you, David. Thank you again.
You bet. Guys, hope you enjoyed this episode. We'll see you at the closing.